thank you for taking the time to listen to me today. I'm Lindsay Keeble, Global Co-Head of the Maritime Sector at Watson, Farley Williams. When I was asked to do this talk, I had to think long and hard about what I could say that would be engaging. There are many people who can talk about the detail of technological advancement and how to achieve decarbonisation. So I've decided to focus this on the personal journey which I've been on, together with the firm looking at ESG in the maritime sector. I've been at WFW for 22 years and I can honestly say that I love my job. The changing nature of the market means that there's never a dull moment, and these changes mean that there are always new challenges and the ability to learn and develop. Historically, WFW was known as a ship finance boutique, and I'm pleased to say that this is no longer the case. We have the largest dedicated maritime legal team covering all services to the sector. This growth has been brought about by the changes that we've seen in our client base. For example, PE entering the sector, and our client base has changed significantly. We now act for a number of the largest ship owners and operators. Together with my co-head, George Paleokrasas, we feel strongly that given our size and our coverage, we play a really important role in supporting our clients throughout all changes in the sector. And this is even more so following the UN Governmental Panel on Climate Change report, which was released this month. So the key issue now on everyone's minds is clearly ESG, if it wasn't before. We wanted to be able to use our resources and our voice to assist clients facing the challenges of the ESG agenda in a meaningful way. Looking at sustainability was therefore an obvious choice for WFW's ESG report, the Sustainability Imperative, which we launched in March of this year. So, looking at the WFW team and our journey, the perception of shipping in the general public is negative, and the industry does face a lot of criticism in the mainstream press. However, I firmly believe that you cannot look at shipping as an industry in isolation. Shipping exists because of other industries and global consumerism, which must be recognised when seeking to tackle and educate on ESG in the maritime space. WFW's report supported this, and it supported what we already know, that tackling decarbonisation is the biggest issue facing the industry. What also came up very clearly is that addressing these challenges cannot be done alone, and collaboration is the key to success. We are therefore incredibly focused on being able to work with our clients and other stakeholders as they find solutions to these challenges and to provide support wherever we can. So you may wonder what a law firm can do on ESG which is relevant to the maritime sector. We see that everybody has a responsibility to play their part in driving the change, and for us this involves using the WFW network to encourage debate and provide a platform for stakeholders to come together and to collaborate on these issues. We also have a social responsibility to engage with the changes ahead. The connection to D&I and wider sustainability as a firm is a core focus and forms part of our values internally. We mirror the industry's enthusiasm, for example, publishing our gender pay gap report, going beyond the regulatory requirements, and having an internal D&I and sustainability leads who are driving change in these areas within our firm. I strongly believe that if you are speaking on ESG issues, it's important to be authentic, and to be able to do so, we need to show that we are focusing on social issues facing our global workforce, as well as ensuring that we have good governance practices. While in many areas we acknowledge that we are on a journey, but we want to be able to lead by example. Clients turn to us as trusted advisors, not just for pure legal advice. They also seek our opinion on tax structures, for recommendations on board diversity, and we can share knowledge gleaned from our thought leadership report, but also how we are interacting with our own staff. This was highlighted even more in COVID, where, for example, we were able to share with our clients how we were staying connected when working remotely and supporting our graduates on their career journeys. I also volunteered to be a sponsor partner for the firm's Mosaic Network, our ethnic and racial diversity group, so that I could learn more on the issues faced by our colleagues from ethnic minorities and champion positive change in accordance with our D&I goals. I also feel that I've personally been supported on career progression as a woman within a city law firm. It would be fantastic if this would be true of the industry as a whole, where currently there's only 2% of women in the maritime global workforce. In this, the value of role models cannot be overstated. Our team speak very highly of WFW's track record of having women in leadership positions being an inspiration to them. We've also been looking at our graduate recruitment processes to galvanise an interest in careers at law firms and to open our doors to people that may not have ordinarily been given such opportunities. We work with organisations such as the Bright Network. This supports and enables social mobility. Like me, 75% of their membership is state educated and 43% are the first generation to go to university. We also use rare contextual recruitment in our application processes to ensure a level playing field for all candidates, and happily we are already seeing the benefits with a more diverse intake within our trainees. So what about the maritime industry? The E is clear, so why should you need to focus on the S and the G? Given the strength of our ship finance practice, we were the natural choice to support the development of the Poseidon Principles, and we've engaged with a number of financiers looking at how they can encourage environmental change. This was followed by the Sea Cargo Charter, and as can be seen from legislation, particularly in the EU, it is clear that pressure from consumers, regulators, financiers and shareholders on the E of ESG is not going to go away. So I want to focus today on why we feel it's important for those involved in shipping to also think about the S and the G. Our report clearly showed that companies need to consider these elements as much as simply looking at the environmental solutions. It's been reported that it will cost around $1.5 trillion to develop the technological solutions needed. This, of course, needs to come from somewhere. So step change in the industry's approach to social and governance issues will be important when looking at new sources of capital. Market analysis clearly shows that companies with high ESG ratings are more resilient. In addition, there is global pushback to divest funds from industries with poor ESG track records. ESG is therefore clearly important for financiers, as resilient businesses are clearly better to withstand challenges. In addition, our report findings revealed that 56% of financiers have formulated their own ESG requirements, which borrowers will have to meet, so this is not going away. This was clearly highlighted in WFW's report by Starbulk's Chief Strategy Officer, who said, more regulation to force ESG improvements is already happening, and it will continue to do so whether ship owners like it or not. The global head of shipping at DNB reinforced this message, saying that for his bank it would be very difficult for them to justify projects which do not fit within their ESG strategy. This highlights that the head-in-the-sand approach on these issues will not win the day. This has certainly been true of the environmental agenda, where we hear complaints from owners that the regulation is not fit for purpose. So we'd encourage early engagement on the S and the G to ensure rules are relevant for global industries such as ours. As we note in our report, many industries and many in the industry believe that the drive to sustainability will bring about changes in the shape, capital structure and finance of the sector, and therefore shipping won't be able to bring about significant changes without addressing the S and the G. The majority of those surveyed in our report say that up to 75% of the maritime industry will successfully address the ESG issues in the next 5 years. This supports the view that stakeholders need to be getting on top of these issues in the short term so as not to be left behind. What does the S mean for shipping companies and key stakeholders? Social is a key theme of LISW 2021. The S is inextricably linked to, and some would argue underpins, the E and the G. Shipowner respondents to our survey view the social elements of ESG as very high on their agenda. They are significantly and perhaps rightly more concerned with crew welfare than they are about financial reporting. The common social factors to be considered are human rights, local community impact and employment, working conditions and health and safety. As Steve Davies, CEO of Anglo Shipping, highlighted in his LISW talk, the social conversation does need a reset. It's not just about crew welfare, it affects and drives everything. The types of factors and some changes that shipping can be looking at, and which will be relevant when looking to the public markets for funding or to attract new investors, are identifying communities affected by shipping. For example, having a strong ship recycling policy. Considering how local communities are engaged and how ports and shipping affects them, and to work with those communities to understand and develop relevant standards. Working towards reduction of corruption and piracy in the industry should be key on the agenda, as well as improving labour and human rights standards across shipping. While there are no global rules and regulations on what good social standards looks like, there are quantifiable measures which are looked at the public markets. For example, relating to CEO and gender pay ratios, living wage, gender diversity, non-discrimination at all levels, as well as health and safety and human rights breaches. It is inevitable that it's only a matter of time that regulation in this area will further follow. Consumer pressure and the pandemic does put a spotlight on these issues, and the crew welfare crisis should be a catalyst for change. Diversity is also seeing more airtime. As my fellow co-head of maritime at WFW, George Paleokrasas, noted in our report, attracting, retaining and supporting a diverse workforce is key to a long-term sustainable business. This is something that all stakeholders across the supply chain should be looking at and reflecting in their businesses. We are particularly fortunate at WFW in having excellent female role models, but there's always so much more that can be done to ensure that the legal profession is accessible and considered as a career path for a wide range of graduates. And what about the G? Governance is often forgotten about, but it should be the foundation to any well-run business. When we talk about governance, we are talking about alignment of interest with your corporate purposes, executive compensation, board independence and composition, as well as your tax and accountability structures. Factors and changes that shipping can look at are leadership improvements, their bribery and corruption policies, board diversity, as well as financial reporting and working with transparent structures. Again, when looking to access new funding, quantifiable measures in this area will be by reference to these factors. Companies should, if they've not already done so, consider developing a strong internal code of conduct which encompasses their corporate values as well as legal frameworks around data protection, sanctions, whistleblowing, and ESG and financial reporting. Unlisted companies or owners looking to access the capital markets for the first time will need to consider what steps they need to take to get their house in order on governance matters, and all listed companies will need to monitor fast-evolving ESG reporting obligations. As our report covers, sanctions are driving lenders and charterers to perform extra governance checks, so it's really important that counterparties have solid, transparent structures, whether private or public. Our findings were that 90% of financiers are already going beyond these standard governance checks or plan to do so. The report also noted that almost a third of non-listed ship owners in the survey are likely to pursue an IPO in the next 5 years to help fund new technology, and a third of all ship owners are expected to issue bonds to fund innovation. So IPO or bond issuance will require companies to have their governance in order, so perhaps alternative financing will be a driver for change. So, will ESG factors really drive change? It's clear that strong ESG performance is definitely on the agenda of the main providers of capital to the shipping industry, in particular those subject to European and US regulators. But this does leave a significant proportion of the financial markets who are perhaps less concerned by these factors as they do not face the same regulatory pressures. The question of balance and proportionality will be an important one. The environmental imperative is tangible and real and supported by respected scientific research. On the other hand, social and governance relies more on a moral judgment, and results are not yet measured in the same way. In the past, significant change in shipping was driven by accidents and catastrophe. So one has to question, how will future change be driven? Do we also need to face a fresh crisis for this change to be realised? Perhaps change will flow from reputational damage, such as that faced by larger tech companies seeking to offshore their businesses, or from consumer demand. Will access to funding alone be enough if funding can be obtained from other sources, if vessels can still be insured, and if professional services are still available to companies with lower ESG track records? Without regulation in these areas, one has to question whether we should be the ones to be making these moral judgments. In addition, as our report states, less than half of ship owners intend to use new bank debt to fund technological change. So perhaps it's incumbent on financiers and regulators to make sure that any new rules which are put in place are proportionate so as to remain competitive and not to drive the industry to providers of capital who do not consider ESG as being of any relevance. As our report states, capital markets are taking a huge interest in ESG because understandably their investors are focused on these issues and the long-term effects of energy transition because they are concerned not only with their businesses but also the overall health and sustainability of the economy and their investments. So to summarise, The evidence showing a correlation between ESG performance and improved financial performance is clear. It has been shown that companies who focus on the sustainability of their businesses in a wider context and who consider their people and also their local communities and the wider impact on the planet can grow long-term profitable businesses that can withstand black swan events. We often hear our clients talking about the risk of being a first mover and concern to ensure that there is a level playing field. But as we have seen over decades, the shipping industry is very innovative and resilient. What is clear is that if shipping is not yet feeling the pressure from society or legislation, it will come. And those companies who have seen the writing on the wall and been part of the conversation to enable change, rather than waiting to have it imposed upon them, will have an advantage. I'm also hopeful that the platform provided by LISW 2021 will, when combined with the UK's commitment to deliver on the UN Sustainable Development Goals, our strong financial community, the enviable infrastructure we have in terms of bespoke financial services and professional services will further enhance the UK as a maritime hub. So let's use LISW as a catalyst to talk about the issues facing the industry and to collaborate to find solutions. There is a strong business case for change and the sustainability imperative is clear. Thank you very much for your time.